Now, most people assume that the best way to build wealth and to build wealth for retirement is by doing two things: max out your 401k and max out your IRA. Now, I hate to break it to you, but I don't have a 401k. I also don't have an IRA. I don't use these tax-deferred retirement accounts because I can get better returns investing my money myself. I can get better tax breaks by investing my money myself, and I can have more control over my money when I invest my money myself. Now, this doesn't mean that you shouldn't use a 401k or an IRA. They're great for the right people. Okay, for the average person, a 401k and an IRA is a great place for you to start investing your money, but you have to understand that when you invest your money into these things, you do sacrifice some control, and you're going to sacrifice some ability to decide how you invest your money. But for most people, that's fine. But I just want you to understand that those are not the only ways for you to invest your money, and they should also not be the only way that you invest your money. So now, as you're trying to create a system and a plan for your money, the first thing you want to do is create a system, something like maybe our 75, 15, 10 plan. You can find what works best for you, but this is something that's very simple to follow. The 75, 15, 10 plan says that now for every dollar that you earn, it's going to flow through this funnel. For every dollar that you earn, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest, and 10 cents is the minimum that you save. Now, you're only going to do this saving until you hit your savings goal. So if you're saving 6 months worth of expenses, after you hit your 6 months, you're going to stop saving and you're going to put this money here, which means what you want to do, and you really need to do this, you need to create 3 different bank accounts. You want to have a bank account for your spending money, a bank account for your investing money, and a savings account here. So now, anytime you get paid, money is going to come into this bank account, and you want it to automatically be pulled out of this bank account and put here and here. Most banks will allow you to do this for free. If they don't allow you to do it, or if you don't have a bank that allows you to do that, you can make these type of transfers yourself, or you can use another app. I'll talk about different things that you can use, but you want to make sure this is happening automatically, or if it's not automatically, you want to make sure that it's happening every time you get paid, because now you don't want to accidentally spend your savings money. You don't want to accidentally spend your investing money. I'm an attorney, and there's a legal concept called commingling, where if you have a business entity, you go out and create a business, and you use your business bank account to pay for your personal expenses like your groceries. That's called commingling of funds, and it's a big no-no in the legal world, because now your business can be confused with your personal bank account, and now people, if you get sued, can sue you for your personal assets, not just your business assets. I want you to think about that here too. When it comes to the way that you spend your money, you don't want to start commingling your money. You don't want to commingle your savings with your investing your money. You don't want to commingle your investing money with your spending money. You need to have these separate, that way you don't accidentally spend your investing money, and that way you don't accidentally spend your saving money. So I already talked about how and why you need to be saving your money. This is how you build your financial cushion. But let me talk about now, how do you actually invest your money the right way? Because in general, there are 3 ways that you can invest your money to get a growth or return on your money. You can invest your money into companies, you can invest your money into physical real estate, or you can invest your money into commodities. I'm just gonna shorten that right there. These are 3 different places where you can invest your money, and now you need to understand what is gonna be the best investment for you, and how do you create a system for you to invest your money. So now you know you're gonna be putting money aside for your investments. You have this investment money being built up, so now let's talk about the 3 different ways that you can invest, and how you actually invest and grow this money, because this is how you are gonna become wealthy. The more money that you put here, the more wealth that you will accumulate, and the better returns that you can get here, the more wealth that you will also accumulate. So you got to understand, this is the key to building wealth. It is not this, and it's not this. The less you spend here, the more wealth you can build. But let's talk about now, what do you do with this money to build wealth? Investing in companies is probably the most well understood and the most common way for you to invest your money. If you're investing in a 401k or an IRA, chances are your money is being invested into ETFs or index funds or companies, the stock market. Those are all companies. But the reason why I didn't say stocks is because you can also invest money into companies that are not on the stock market. So you can invest money into private companies that haven't gone public yet. So you can invest money into startups, or you can invest money into your own company. If you have a business idea, a side hustle idea, you can invest some money there. I'll talk more about that in just a second. With real estate, now you're investing in real property. You're investing in real estate where people are living there or using the property, and they're going to pay you rent for using this property. And so now you own a physical asset, the real estate, which is also generating a return through rent. And you can also own commodities, things like physical gold, physical silver, maybe even Bitcoin. This is another way for you to earn a return. But in general, when we talk about gold and silver, you're not really trying to get a real return on your money. I like to look at gold and silver as more of real, physical, hard money. So it's another way for you to save your money. Now, Bitcoin can be arguably another way for you to invest your money and get a return, but it's much more speculative. And you have to understand that if you are going to be investing in cryptocurrency, it should be more just on the speculative side of your portfolio. So now, if we focus in on the stock market, one of the most proven systems to build wealth in the stock market is by using a dollar cost average system, where now you're not trying to time the market, you're not trying to time the perfect company. All you're trying to do is you're just going to invest your money into some ETFs or index funds, which are funds that give you exposure to a whole bunch of companies. So instead of trying to find the perfect company like McDonald's or Tesla or Amazon, what you're going to do is you're going to invest your money into a fund that's not going to rip you off on fees, that's going to give you exposure to a bunch of companies. So one of the most common examples of this is an ETF that gives you exposure to the S&P 500. So you have a couple ETFs, you have VOO, you have SPY. I'm personally invested into VOO. So both of these ETFs are giving you exposure to the biggest 500 companies on the stock market. So anytime you invest your money into either of these ETFs, now you're getting exposure to the general stock market. If the stock market goes up, you make money. If the stock market goes down, generally your ETF is going to go down. So you can create a dollar cost average system where you're just investing your money into a handful of ETFs. If you want to be more involved with your investments, then you can start learning about how to invest your money in the stock market, and you can look for undervalued companies and buy them and then hold on to them for the long term. Now you got to understand that when you invest your money, you're trying to hold on to your companies for the long term, and that's very different than trading your money. Trading your money is when you're trying to buy and sell stocks within less than a year. That's not investing. That's where you're hoping to see a quick rally so you can sell it for profit. I look at that like gambling. You can make a lot of money gambling, but that's not for me. If you want to invest your money, you have to understand that it's going to take time, and you have to also understand what types of investment goals that you have. If you really want to be involved and you want to get the better returns, you need to learn about fundamental analysis. You need to learn about how to research companies. You need to learn how do you actually invest your money. If you're not willing to put in that work, then come up with a passive strategy, kind of like what I talked about. I do both. I have a passive strategy and an active strategy. I'm looking for undervalued companies, but a passive strategy is just dollar cost averaging your money into the market. That way you can get the returns of the market, and now whether the market's up or down, you're still just putting money in. That way you can let the market do its thing and help build you wealth. If you're okay taking on a little bit more risk, then you can also look at investing in startup companies. This is a lot easier now than before because of something called Reg CF, regulation crowdfunding, which lets the regular people invest in these type of startup companies with as little as $100. So there's a bunch of platforms on the internet. WeFunder, Republic, Start Engine. I'm not sponsored by any of these companies, but there's a bunch of these types of companies on the internet which allow you to crowdfund your money and invest in these startups. Meaning now you're getting a little piece of equity or the option to buy equity in these startups, but the risk is you only get paid if these companies go public or if they get acquired. If they don't get bought out or if they don't go public, well, then you don't actually see a return on your money. So it's much more risky, but you have the opportunity to see much bigger returns. Or the third thing you can do to invest in companies is you can invest in your own business idea. It's impossible to beat the returns of starting your own business, but now it is very risky to start a business, and there's a big chance that your business will go to zero. But if you really believe in your idea and you believe in yourself, then you can also invest in your own business idea and use your money to help fund your business idea and try to grow that into something a whole lot bigger. The second way that you can invest your money is by investing your money in real estate. I love investing in real estate because when I invest in real estate, I own something tangible, something that I can see, feel, and touch, and this thing is also going to pay me with cash flow. So I also invest in startups, but the downfall with startups is I don't know if and when I'm going to get paid. When I invest my money into a startup, I might not see my money for years, or I might not even ever see my money again. But when I invest my money in real estate, I go out and buy a house, I go out and buy an apartment complex, and I can start making money in just a couple months, because once I have a tenant there, they're going to start paying me rent every single month for using my property. Now, the downfall with real estate compared to this type of crowdfunding with companies is it costs a lot more money to go out and start investing in real estate. Like if you want to go out and buy a house, or if you want to go out and buy an apartment complex, it's going to cost a lot more money than investing a couple $100s into a startup. But when it comes to real estate, you also get paid two ways. You get paid with cash flow, and you also get paid with depreciation. Your property is going to pay you rent, and hopefully this rent is going to cover all your expenses, assuming you do it right, and it's also going to put some money in your pocket. And if real estate prices go up, then the value of your property goes up too. Now, if you want to learn more about how to actually do this type of investing, you can check out Market Insiders. It's an investing education app that I created where every week you get access to stock market, real estate, and cryptocurrency coaching. You can try it out for free. If you want to try that, I'll put the link down for you in the description below so you can try it out with a free 10-day trial. And then you have this type of commodity investing where now you own something like gold, you own something like silver, or you own something like Bitcoin. Now, when I talk about investing in gold and silver, I'm not talking about investing in gold funds or gold mining companies. I'm talking about actually owning physical gold. I own physical gold, but for me, it is a type of saving. It is saving real hard money. It's not for me to really see a return on my money. It's another way for me to save money because I understand that the value of my dollars are being diluted. Now with Bitcoin, it's a little bit different. People used to make the argument that you should invest in Bitcoin as an inflationary hedge, but now as Bitcoin has developed and it's kind of changed, where people are understanding that there's a lot more power in the blockchain of Bitcoin. So if you want to invest in Bitcoin, you can, but you just have to remember that it is more speculative and it's much more volatile. And so because it's so speculative and volatile, it should be a smaller position in your portfolio because there's a chance it can go up and there's a chance it can go down. So you want to understand where you should be investing your money based off of your goals. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.